Okay, we're just going to have a look at a few stocks here, some that we'd been looking at before. However, this is the gold, GOLD on the ASX market here. And we'd pointed this out before when it was sitting at this 130 level here, this minor level here. And of course, the next level up, we've got 10, 20, and 30 as minor trading levels. And then we've got the medium trading level, which is the 150 there. So, but what I wanted to point out here, as we pointed out here, we figured that this market was going to go up last time we had this video because of this particular correction in here. This pretty much this sort of simple ABC correction like this here. And in this correction here, we can see that we've got little B wave in this correction here as well, and then we'd be looking for 5 waves in the C wave here, which we had, and then we're looking for an impulse up to the upside here. So we kind of expect this to push a fair bit higher actually, and the reason I sort of say that for is just because of the reoccurring patterns here. So we could kind of consider this little move up through here, because this is where the low was, this move up through here. Then we've got this move up through here, which is bigger, and then we've got this move up here, which is bigger again, and this is what we're kind of expecting coming up through here. And it's the same with the corrections as well. This whole pattern up here is expanding. So we've got this correction here, we've got this correction here, which is bigger, and then we've got this correction here, which is bigger. And if you look closely, you can see that they're actually reoccurring patterns. So we can see that this first one here, we've got that little sort of 3-wave pattern there. Yep. Then we've got this one here, a little bit different, but sort of there. And then we've got this one here, which is, you can see this, they're similar in this sense through here. So these corrective patterns are the same, so they're just reoccurring patterns, but as we're moving up in price here, in terms, we use the price as ratio, so yeah, the ratio of this expanding process is continuing up through here. So I just thought I'd point that out because last time we talked about this being in down here, and we were looking for basically five waves up through here. Yeah, so we'll see how we go with that. But I wanted to talk about some other stocks we were talking about before. Some of them I know we talked about, some of them may not have been talking about, but not to worry about that. Okay, so sort of doing this off the cuff a little bit. I'm not quite sure how I remember these here. Okay, so I don't know if we actually mentioned this one, but it's kind of the like as well. In this particular pattern here, we can see markets are just trends and corrections of different degrees. So this is a trend through here, and this is a correction through here. And normally when we look at something like this here, we're not really interested in it because it's not a trend, it's not going to make us any money. But here at the Trading Lounge, we like big corrections like this because we understand that the next trend is going to come from that correction. And that's pretty much what's sort of occurring here. I won't drag you through this particular correction here, but in terms of the A wave to here, the B wave to here, and a C wave to here, and then we're starting to get a bit of an impulse wave to the upside here. And an impulse wave is just quite simply 5 waves, so we'd be looking for 5 waves like that. And that would be a positive move for that direction. At this stage, it's not a impulse wave. At this stage, the reality is that it's a 3-wave correction to there. So that 3-wave correction could certainly be a corrective move for the downside, but the reason I'm bring it to our attention here is that if this market finds support on the 8 here, on the trading level 8 here, major trading level, if it finds support on here and starts to move up through here, then we know we've got an impulse wave. And that way we can start to scale in small amounts of money to take advantage of the next trend, because the next trend would take out the top here, and it would be about the same length as this one here, and this correction here, and the same sort of length again here. So we'd be looking at sort of $10 from that 8 level there, and that's quite a possibility. Of course, the general market needs to sort of stay stay in that sort of direction. But the minor trading levels here, 1, 2, and 3, 10, 20, and 30. So if we found support on 30, we could definitely go with that. We may do that before that occurs, though. The next one here, I think that we talked about before. Once again, a corrective move, and yes, well, this is the corrective pattern. And the point is it finished and is it ready to go? So I'll just clean this up. It's okay like that, I guess. But look, basically, we've had this correction across here, and now this market's making an effort to get back up here. So normally what we can do with these markets is that all these corrections, the distance that it goes sideways, yeah, is the distance that it can go up, that's squaring time and price. So once again, a nice big correction is the foundation for the next trend, and as long as the general market stays intact, then we've got a reasonable possibility with this. So we'd be looking for, the last time we spoke about this late last month, I think that I think we were looking at this move that actually came up through here and the retest. The breakout is not as important as the retest here. If the retest can find support, and you know how to read the volume, you can look at that on the online courses, then we can look for this. So this is really still building support on this 2 here. So it will still struggle within here. So there's still time for this. This correction, this move up here hasn't really had a correction. So if we just assume that this was some sort of impulse wave to here, then we'd be looking for somewhere in here, we'd be looking for a counter trend in here again, and then from that point we can sort of move up from there. However, if it found support on top of group 1 here, which is a 10, 20, and 30, the group 1, it found support on that, then we'd have to move to the upside. So support on 230 would naturally go straight up there, try and getting a small position in here, and then adding above the 250 there. But this correction from the medium level here, 150 to here, hasn't really had a correction. The wave count in here is not clear enough to give you a concise breakdown of that, so I won't do that. But the more support that we can see building on here, the safer we are to move up from that point there. So there is time for this. Keep an eye on that one, because once again, it's just such a nice big correction at this level here, and this could be the point of where it moves off from there. You can see here last time here, it never really found support on this level here, came up and hit it, that's fine. Then the breakthrough up here, yes, it's important, don't get me wrong, but it's not as important when the market comes back and starts checking for support. Obviously there was no support here, and giving a bit of patience time, then dropping through here. So hopefully this time around we will see support in there at that point there. The next one is PEM. Well, it's kind of already sort of made its move here, but we'll talk about it anyway. But so first of all, the levels. So we've got our major and medium levels through here. So the main deal here is the 50. The next is the 65 here. I think it's still interesting because this pattern still seems to be building to the upside, so I don't see any problem of actually getting to 80, 90 and even higher. And the reason I say that for is simply because of this pattern here. You see how that's in 3 waves like that? That's a corrective pattern in a bull market. So these patterns up here, they would be, you can see that they were building here. Now they're starting to extend, they're starting to expand up through here. So look, there's a little gap here. Not that gaps really matter in this particular stock, but support back on here, and you'd have to give that plenty of room to move and groove to get further up there. But a good support on the 65 would see PEM much higher there. PEM, so worthwhile watching, but support on here, but should take out these tops there. LCY, sort of owe you an apology for this. I should have gotten you in earlier on this, at around this level here. Just a bit sort of slow off the mark. Can't do everything at once, I guess. But first of all, the main point here is this level here, the $2 here. And yes, well, you can see that it's basically working across the $2 here. Now this is a three-wave correction here. So we've got an A and a B and a C wave in here. And the C wave, I can see the 1, 2, 3, 4, 5, and we can start to see it building up here. So we've either got a larger correction unfolding, or we've got something like this building to the upside there. So we've either got that pattern occurring there, taking that top out, or we've got a larger corrective pattern moving across the market as such, and that won't come that far down in that case. That would be something like that, not finding support on there, and then coming to here, and then pushing up from that point there, and would catch it, definitely catch it over there. So you could go long in here, and we could end up with a loss if it came back below the level. Otherwise, we would catch it back over here. So that's a good thing about the levels. If you get something wrong over here, then there's always another timing opportunity further down the track there. So a bit of a tricky one. I would imagine that there's going to be problems at the 230 there. So we may see a smaller pullback within that, and that may be worth looking at that stage there. This 210, this is the minor trading levels here, the 10, 20, and 30. And as mentioned before, if support can be found on the 230, then it separates the price psychologically from the $2 here, that the previous largest number. And that process really, if you wanted to look into that further, that process you'll be able to see in the market depth as the orders are lifted from these lower points here. There will be supply up here, of course, as people bought up here chasing the market. So we never chase something through a level. We wait for it to come back, waiting for support, building up, and then move in from that point. So anyway, just having a general chat here, nothing that important. IAU. Okay, kind of like, you know, we're really up high here. This is a strong third wave up here. If there was going to be another push up here, it would be the fourth wave, because we've got up for wave 1, back for wave 2. The third wave's all the way up here. This would be the fourth wave pulling back, and there would be a fifth wave going up to probably 250 up here. Now, this correction here, this pattern here, is a three-wave correction. It's not an impulse wave. This would be an impulse wave to the downside. Right? That would mean that we're going to get further direction down. A wave like that coming down in three waves is a corrective pattern in a bull market. See this one here? See how that's corrective? So then you know that top's going to be taken out. This is exactly the same as what's going on here. One of the problems here, though, is that this move up through here, I can see 5 waves up there. And what I mean by that is just the normal basic 5 little waves like that there. Now, that would be the 1, 2, 3 there, the 4 there, and the 5 there. So this would be an A and a B and a C wave down to here. So normally when we get a 5-wave move like that, what happens is we get the counter trend. This is called an impulse wave coming to the upside, 5 waves. This 3-wave counter trend, all these together would be 8 waves. That's 5 and 3 is 8. That's called a motive wave. Once we've got that there, then we can see a push up. So once we've got that little ABC there, that little ABC there, then we can expect another move up like that. So we can tack that on to there. Now, an ABC correction normally comes back 61.8% of that move up there. So we could take it from down the bottom down here and take that up there. So it can come back to the 185 there. And normally when we're dealing with the levels, we know that in this case, the major trading level is the $2 mark there. Let's clean this up here a bit. So we've got it's still working across this level there basically, so we can get that move back down. And when we're working with working with a big number is fine, but to refine your actions, your understanding, and working with the market is to bring in the next levels. In this case, well, the medium is the next level, but around the $2 here, or the $3, or the 5, or the 10, you look at the minor trading levels. These are the minor trading levels: the 180, the 10, 20, and 30. And you need to work with those essentially. So if this market is going to come back down, it can come back down to 61.8%. So if it came back below the 80 here, then you'd be in trouble there. So really the stop would need to be under there. But when you're using Elliott wave and Fibonacci retracement levels around big numbers like $2, it's really going to skew things out a bit. So not to worry about that. So I mean, you need to include that in the situation. So yeah. Anyway, you just sort of wait for this retest to come back down here, and if support found back up here, then we can scale in. But yeah, see how we go with that. But yeah. Anyway, it's all good. Without taking up too much time, ARU. Right. Okay, this is interesting. First of all, we always work with the levels, so it's always good to be on the right side of the levels. Take those off. So we just got the medium level here, the 150, and we've got the minor trading levels under this. Okay, so yeah, so that's what we're working with. So in this particular, this is a correction here, and it appears to be an ABC correction in terms of like that, really, and that's sort of it there. And with an ABC correction, the A wave here can have 5 waves in it or 3 waves in it. So it doesn't normally give you a very sort of good understanding. But in this case, we've actually got 5 waves coming down there. So if we get 5 waves in the opposite direction of what's been happening, in this case, the market's been moving up. If we get 5 waves in this direction, that means straight away we're going to get another 5 over here in the wave C. If we only had 3 down here, then we could go straight up and make a new high here. It's like this is 3 waves here. So we had a smaller 3 waves in here. We could possibly move up there. But because we had the 5 here, then we're going to get another 5 here after we get this counter trend correction here. And the counter trend correction here, this is an A, a B, and a C. The B wave has always got 3 waves in it, like that. And the C wave has always got 5 waves in it, right, like that. It's just a standard thing. Inside this B wave here, there would be a smaller A, B, and C. And like I said, the C wave has always got 5 waves in it. So that would be 5 waves going up through there. So I think that we're in this C wave here, which would just be a regular flat correction. Flat meaning that it's flat, so to speak. So we're pretty much done with the C wave, because when you look closely, we kind of got down for wave 1, back for wave 2, down for 3, back for 4, and down for 5. Now, in this last wave here, there could be, may not be finished in terms of we may have 1, 2, 3, 4, and 5. I don't think so, because this wave here has moved up into the price territory of wave 1. But dealing with smaller stocks like this, we need to be a little bit careful. However, if this market made a high above or found support on the 130, then we could go long. We could get one position in here and then just chill out until because it would react at the 140, the 144, and the 145, and then eventually find up here. Once we got support on the 150, then we can look at trading to $2, because that would be our next level up there. It would be this guy here. So this nice ABC correction here, this top would be taken out and would be looking for a larger 5 waves to the upside. So either from right here or from one little leg down, we'll be looking at something like that. So that's really sort of interesting, because this is a correction that's finishing. And just another little point in here as well, we've put this as a switch as well. Because we've got this move up through here, then we've got this move coming down here, basically taking the low of this guy out here. So what this price bar is doing, it's checking the demand. It's checking deep in the market depth to see if there's a thing there. So we would go long above this bar here. for the switch. Now we don't know. We may get another bar that comes in down through here. We don't know that, but that's okay. Then we don't get triggered. So we might get 2 or 3 down here, but then if we say we got this one here, and then we make a new high above this high here through here, then we would be going long above this one here. With me, so this market's moved up, come back down and done the checking, retesting the demand, checking for support, and then would move up. So it's a bit like the Dow theory, really. The Dow theory's really sort of like this here, really. So it's just up there, coming back here, and then taking the top of that out there. That constitutes what they call a trend, very basic like, but that's the basic pattern. All right, well, that's just a bit of a general chat, and all good. All righty, cheers.